So this is a 1 to 16 winning trade taken using institutional options flow and order flow analysis and volume profile techniques. Large red bubbles, big trades. These are banks, large institutions, smart money push the price down. This is where we placed our first trade. Look at the options flow at that time. The dealer hedging is bearish at this moment. Another reason for us to take the trade was these red bars, which are bearish stacked imbalances. So we place our second trade in this area of this red bubble. Stop loss to be above this green bubble. Look at the footprint chart. Big aggressive sellers aggressively sold and pushed the price down. And third entry we placed over here. Small stop loss for a larger risk to reward is possible because we analyze the footprint chart. Let's zoom down. Cumulative volume delta CVD is bearish. If we draw the volume profile, you can see the volume point of control. So at that time, if you look at the options flow and the dealer hedging, we can clearly see the dealers are heavily bearish biased. Purple color line. This supports our idea of a bearish trade taken according to the options flow analysis. Options flow gamma levels. Second trade for 1 to 5.2 winning and third trade for 1 to 10 winning trade. This is a remarkable 1 to 16 winning trade taken using institutional options flow and order flow concepts, footprint charts, volume profile, and the secret sniper, big trades and stacked imbalance indicator used by world's top traders. So this is a remarkable 1 to 16 winning trade profit taken using institutional options flow and order flow analysis and volume profile techniques. So I'm in the micro mini Nasdaq index futures 30 minutes chart. So now the time is 9:30 a.m. New York time. So on this day you can see the price is currently ranging, and you can see the previous day daily volume point of control is over here. Also you can see, if you look at the week, if you look at this area, the week is in a range, the range high over here and the range low over here. So if you look at the weekly volume profile, so this is the weekly value area high and this is the weekly value area low over here, and this yellow line here is the weekly volume point of control. So currently the price from a weekly aspect, the price is in the weekly volume point of control level. And you can see the previous day volume point of control is over here. And because the price was bouncing up and down during the week, today there is a chance that the price, because it's in the weekly volume point of control, there's a chance where the price could go down towards the weekly value area low, and also targeting the previous day volume point of control, because these locations act as magnets for the price. So because of that, today we are looking at a potential bearish biasness. So our daily bias for this day is bearish. So now let's jump into the 5 minutes chart to see potential trade setups. So this is the 5 minute chart, and this is that area where the price was ranging today. So what we did was we draw a volume profile for that area using the market profile and TPO tool. So for that volume profile, you can see the value area high is over here and the value area low is over here and the volume point of control. So at 9:30 start, the price was in near the volume point of control of that volume profile, and then you can see the price has started pushing down in this area. So what we are looking for is possible price displacement going away from this value area low, going downwards, going away from this volume profile value area. And if that happens only, we are looking for potential trade setups. So now let's see what the price is doing. You can see the price is going below the value area low. So now you can see the price sharply push down in the value area low, away from the value area low with huge displacement. So now I'm in the 1 minute chart. So you can see when the price displays down, breaking down from this value area low, from the volume point of control of that volume profile we draw, you can see these large red bubbles. So these are big trades. So these are banks large institutions, smart money, so they have been involved heavily in this price push down. So you can see when the value area low is broken, that's also broken with power, where you can see a green bubble here, which means aggressive buyers tried to push the price up, but they failed, and passive sellers has absorbed that aggressive buyers, and then aggressive sellers has strongly pushed the price down. The smart money and the big banks has strongly pushed the price down. So when we see this price action where the price pushed down and retraced, and then buyers failing and aggressively sellers pushing down, breaking this value area low, so this is where we placed our first trade entry. However, this is not one of the A plus trade setups. This is a risky trade setup which we are trying to take with the power of the sellers, but these sellers may not be able to defend the price. So this is a kind of a risky setup. However, due to these facts, we place our first trade entry over here where the stop loss is above these red bubbles, and we target our first take profit of being 1 to 1, partial take profits. Also, another reason for that quick trade is, if you look at the options flow at that time, you can see the dealers are heavily bearish with the accumulated negative delta position of 360 million, which means the dealer hedging is heavily bearish at this moment. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. So that was another reason for us to take this quick trade over here, because with that extra confirmation of options flow. Let's see what the price is doing now. So we took our second partial take profit over here when we see the price reversing back with these bullish candles. And also another reason for us to take the trade was, as you can see over here, these red bars which are bearish stacked imbalances. That also was a reason for us to take the trade. Let's see what the price is doing next. You can see the price is strongly pushing up, but we have already taken partial profits of 1 to 5, and once we see this range build up, we have already moved our stop loss into break even, so we are in a risk-free trade now. Let's see what the price is doing next. You can see the price came and hit our stop loss, but it's a risk-free trade because we have moved the stop loss to the break even. So we have taken our first trade for a take profit. So now let's see what the price is doing. So now you can see the price retraced all the way again up to the value area low of the volume profile we draw for the range of the day. Also, you can see in that retracement there's large green bubbles, which means there are big buyers pushing this price up in this retracement. So because of that, we are not taking any trade entry yet, and we are analyzing the price to get extra confirmation. So now let's see what the price is doing next. You can see the price is ranging in that value area low area, and it printed a sell side stacked imbalance, this red color bar, and then the price is ranging, and you can see now the price strongly started pushing down with sell side stacked imbalances, these red color bars. Now this is where we are again interested of looking for a potential sell side trade entry, because we are pushing down away from this value area low. So now you can see in this price push down away from the value area low, you can see it printed large red bubble, which means again aggressive sellers are pushing the price down. So these aggressive sellers can be smart money, big banks, institutions, and large players pushing the price down. And also you can see there's a sell side stacked imbalance which is supporting this aggressive selling activity, which makes us interested of looking for a potential sell entry in this area now. So this is where we place our second trade, where we place the trade just in this area of this red bubble, and the stop loss to be above this green bubble, where the aggressive buyers tried to push the price up. However, they failed because a wall of passive sellers, as here and here, has absorbed these aggressive buyers. So that is where we protect our stop loss. And if you look at this price leg push down, that's where we can target our first take profit, and also just to be above this failed aggressive sellers and above this failed sell side stacked imbalance. So we place our first take profit for a 1 to 2 in this area. Also, we placed our third trade entry in the same area with a tighter stop loss using footprint chart analysis for a larger risk to reward. Let's have a look at it now. So now I will zoom this area of the chart so we can read the footprint chart. So if you look at the footprint chart of this 1 minute chart, you can see this is where the large sellers, big aggressive sellers, aggressively sold and pushed the price down, and you can see there's a sell side stack imbalance also in that area. So our third entry we placed at that price point over here, and you can see towards the left into that we can see a buy side stacked imbalance over here, and also this sell side stacked imbalance which failed earlier. Collectively with this buy side stacked imbalance can now act as resistance in this area. So that is the area where we plan to put our stop loss to protect our third entry. So placement of this small stop loss for a larger risk to reward is possible because we analyze the footprint chart. So that's where we place this stop loss over here, and also you can see in this area there's aggressive sellers being printed in this footprint chart, which confirms our sell side trade entries. And also you can see this support is broken now, so which can act as resistance. So that's another reason where our stop loss is over here. So now let's again zoom down for the candlestick chart. So now let's look into extra confluences of options flow and order flow which supported these sell entries. So you can see when the price displays down strongly down from this value area low over here, you can see red delta being printed, which is extra confluence for us to support our bearish entry. Also, if you look at cumulative volume delta CVD, you can see the CVD is negative, bearish, pushing down, and in the retracement leg, you can see the CVD is not strongly pushing up. And also you can see in this area of where we took the sell entries, you can see the CVD again started to print bearish candles. So which is also an extra confluence to support our bearish entries. And also you can see when the price pushed down from this value area low, breaking this value area low, it has broken it with high volume. That's also another confluence for us. Also, this failed buy side stacked imbalance can act as resistance when the price come down. And also you can see the sell side stacked imbalances are printed here. And for this price push down, if we draw the volume profile, you can see the volume point of control is in this area, which means sellers, smart money, big banks and large institutions has accumulated large number of orders in this area before pushing the price down. So those are all extra confluences to support our bearish entry. So now let's also look into the options flow analysis to see how large dealers are hedging their positions, which means dealer hedging, where we analyze to see if there is any support for bearish order flow from large dealers. So at that time, if you look at the options flow and the dealer hedging, you can see the options flow is heavily negative, which is around 600 million of accumulated dealer hedging delta value, and we can clearly see the dealers are heavily bearish biased from this purple color line. So this purple color line is the accumulated dealer options flow, dealer hedging value, and the other one is the Nasdaq candlestick chart. So this also supports our idea of a bearish trade taken at this moment. So now you can see the price is strongly pushing down and also printing red bubbles. We don't see much of green bubbles. We see more red bubbles, and also we see sell side stacked imbalances, which all confirms the price is strongly pushing down with the support of large sellers. So now let's see what the price is doing. You can see the price came and hit our first partial take profit for both the trade entries taken here, this one for a 1 to 2.8 and the other trade for a 1 to 4.8. So this is where we take our partial profits and then we will keep the trade running further. So let's see what the price is doing next. You can see the price was ranging a little bit in this area, but it strongly pushed down with displacement going down from this support area over here. So because of that, we will keep holding the trade, and also you can see that strong push down is supported with negative delta and large volume. And also the cumulative volume delta is pushing down. So due to that reasons, we will keep holding our trade for further profits. So let's see what the price is doing next. So you can see the price has sharply pushed down all the way down, and when we see this range building up in this area, this is where we decided to exit our trade, because there is a daily estimated move level in the options flow in this area and a volatility trigger which could hold the price going further down away from here according to the options flow analysis, according to the options flow gamma levels. So this is where we exited our second trade for a remarkable 1 to 5.2 winning trade, and our third trade for a remarkable 1 to 10 winning trade, taken using institutional options flow, order flow and volume profile and footprint techniques. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's end of the video and we will see you in another video.